Hey everybody, welcome in. It's Sunday live Q&A time. This one is called the Shakedown, and it's kind of interesting because scams and traps exist all over the place, and we're going to dig into that too in multiple forms as well and try to identify what makes sense and what doesn't. We'll also talk about how much is left in the Bitcoin bull run. The scuttlebutt around the internet is I'm really bearish all of a sudden. No, I'm just realistic. We'll break that down too. And then we'll talk about borrowing against your Bitcoin, savings plans, new Bitcoin assurance. Very interesting, or not. We'll see. We'll look at Solana, Jupiter, tokenized stock markets, BlackRock's plans, which blockchain could run it. And then we'll look at NVDA versus AMD. We'll look at Solana versus ICP, pair trading, and a whole bunch more. 60 nuggets coming your way. Thank you to the mods in the chat. Thank you to TND Tesla and Sean Donnelly and Kate for being here. Happy Sunday. Let's go. And of course, not financial advice. Just a guy on the internet sharing data. That's all we do here. So don't get emotional about data. All right. Embrace it. Embrace the data. And all the questions come from Patreon. Thank you to everybody on Patreon who helps me dig into things. I learned some things as well from these questions today that fascinated me too. So let's get into the very first question. This is from Bitcoin Orange. Hi, James. In the past, you've shared a table of past Bitcoin cycles by monthly gains and losses. Generally, the year following the halving is where most of the gains happen. Could you explain why you expect only a gain of 50% from where we are now? The gains in 2024 are really a modest amount. And I was under the impression the stock market and Bitcoin will rally in 2025 as a result of the rate cuts. Would be good to understand your bearishness. So this is part of everybody thinking I'm bearish. No, I'm realistic. And I like to sandbag stuff too. You know, we could kick off in a big way and we'll talk about all the data. Thank you, DBF. 430 and Kieran McDonnell out there. So let's talk about the market. And this is all the good stuff that I see. But we'll also take some perspective as to how far we have come in such a short window of time. First of all, I do believe we are 2/3 the way through the bull run, okay, from a timeline perspective. Also, it could be even more egregious from a returns perspective. We'll break that down in a second. It's 9 months since the halving, correct. Institutional adoption is on fire. We had a massive day for the ETFs on Friday. MicroStrategy bought 1.6 years of Bitcoin supply in just months, and the miners are not selling, they're stacking. Sovereigns are coming. If they're not already here, more are coming. Regulatory clarity is also coming. More rate cuts, correct, are coming. And potential 40% chance of a U.S. strategic Bitcoin reserve. But despite all that crazy goodness, I believe most of the gains are probably in. Remember, markets normally are forward-looking. They don't need to wait for these things to happen, for the impact to happen. But let's talk about this. I did do a video which was all my 2025 Bitcoin price predictions of that January 1st. Check it out or just search for it. You pop it up. You probably saw it already anyway. That's probably where this question came from. And let's look at this. So I analyzed there's about 30 different analysts' price targets for 2025. And here you've got the average of all. Target is 192,000. The average from the experts is 206,000. And the average from the platform is 114,000. If you add all them together and create an average of the averages across all these different categories of experts, you get to about $171,000, which is incredible. Absolutely incredible. In fact, it's higher than I believe we could go, despite all the goodness. And remember, if the long-term holders do not sell, and there's a supply crunch, we go straight to $250,000. But I'm not assuming that will happen, okay? Because I don't want people to come back and say, you said we're going to $250,000 and we already got to 200,000. Not the way I work. Now, based on the model, bull run status, okay? This is key here, everybody. And it's as if, no offense, it's as if some people just came to the market in December 2024 and then they got their butts handed to them. And before that, they weren't in. So that's kind of the sentiment I felt actually happened after having the most incredible 2023 and 2024. I mean, way beyond my expectations. But let's look at where we are in the bull run status so far. We're up 500% from the bottom. Okay, bottom is 15.5. And we have the halving. Yes, that happened. We chopped sideways for a long time. We had that floor and we had the roof. And then we broke out due to a number of different factors, like the $42 billion plan from MicroStrategy, which basically will buy up all of the Bitcoin for the next couple of years. And that's on top of the ETFs, and that's on top of things like strategic Bitcoin reserves, and that's on top of a new incumbent president. All of this is good stuff for the space. Now let's analyze this, okay? We're up 5x from the bottom, and going up another 5x from where we are now would take us to $584,000. And that's not going to happen this run. And as I say, most of the gains are in. Now, I'm the guy throwing the wet blanket on everybody. Sorry about that. But just, I'm going to say again, and you always hear me say, get in early, get in hard. People are annoyed about hearing that. But it's so important in investing. Let me illustrate why. If you're buying at 15.5 and it goes to 100K, you get a 6x. If you're buying at 100K and it goes to 200K, which is a super stretch goal, by the way, I don't believe. If we do, prove me wrong, I'll be very happy. That's only a 2x. But if you buy in at 15,500 and we go to 200K, that's a 13x. To put this in perspective, okay? Remember, risk reward. The earlier you invest, the more potential reward there is for the same amount of risk. Okay? These returns compound. The compound effect over larger price movements is staggering. A chart of what that means, again, buying at 15.5 goes to 100K is a 6x. Buying at 15.5 going to 200K is a 13x. And buying at 100K going to 200K is a 2x. Which one do you want, ladies and gentlemen? Drop a comment below. The 13 looks pretty good, and it's a lucky number too. But again, all the action happens in the bear market. Now, looking at my price targets, and I'm not bearish, I'm just realistic. Okay, we've done a 5x, 6x, whatever you want to call it. Are we going to do another one? No, not at all. In fact, the LILO model prediction, massive bull target per me, 155K, that's level 10. Possible $142,000 level 9, yeah. 121K, I believe, is very achievable. Level 8, that's where I would put my money on. Very high probability we get to level 8, 121K. And, oh my God, by the way, if I'm wrong and we go to 250K because of the supply crunch, which is a percentage chance of that happening, I'd be very happy to be wrong. But we'll watch it very carefully. So that's kind of where we are. And that is, you know, remember, we're year 3 into the bull run right now, 2025. It could end Q3 of this year. We're talking August, September timeframe. Maybe earlier, because everything this season has been happening earlier. The pre-halving run happened earlier. ETFs happened. But if a sovereign's go into high gear, if the treasuries continue, if Sailor continues, if the ETFs continue, we could easily see 200,000. And I'll be very happy to be proven wrong. But I don't want people to be disappointed and jump in now and expect a 5x at 100K when it's highly unlikely. Anywho, on with the story. I hope that helps. And I'm not bearish. I mean, people said I was the very bullish guy for the last 2 years. And now you begin to take the foot a bit off the gas as we go forward. Next question is from Crypto Curious. And which InvestAnswer tools can be used to pair trade Tesla and MicroStrategy? I'd like to recreate the 100,000 to 1 million in my tax-free account. Correction, that was 200,000 to 1 million, not 100K to 1 million, but it is possible it would take longer. I just subscribed to pair trading on steroids, only to discover it's not the correct tool for this. Fire a message to the inbox, they'll sort you out. But do you think the pair trading strategy that can be used to recreate at this time? Please direct me to any tutorials and subscription tools that can be used to accomplish this. I missed the giant swing up by MicroStrategy, and now Tesla has had a giant swing up as well. And I can see how the method could have been amazing just in the past months if I had pair traded at the right time. Many thanks and kind regards from Crypto Curious. So first of all, let's break this down. That was as I mentioned, pair trading on steroids is for inversely correlated assets. You go long and you go short. For example, Sol 3x long, Sol 3x short, or Teslac, inverse correlated assets, not pair trading per se. Although you could argue inverse correlated assets are pairs. But this was the experiment, and I did this, and it was not a pleasant time, everybody. I spent 150 days straight staring at charts because I had a goal that I set myself to try get to 7 digits with 200K, just pair trading 100% between 2 assets. And that was to build a new product, a new prototype. Anyway, the tools I used were ArbCloud, IADSS on the pair, and ATR on different levels for the different assets. And again, I watched these charts religiously for 150 days. it was not a fun experience, but the idea behind it was to automate it. This is kind of what it looks like. These are the combination models together on one chart for the pair. So you get a feel for what I was looking at all the time on different time frames. But this is basically the 4-hour chart, which works very well on IADSS and not bad on the HDR. But you can see very clearly, okay, this is MicroStrategy versus Tesla. On the green triangles at the bottom, you flip MicroStrategy into Tesla. And on the red triangles at the top, you flip Tesla into MicroStrategy. Remember, I can only do this in a tax-free account. So if you're doing it in a taxable account, make sure you watch your taxes very carefully. But you can see here how the layers work so well in ATR. They are kind of your guide on top of your sell signals and buy signals from the confluence model, as well as the ATR sell and buy signals. You look at that all together. You also have to keep your head out the window. Keep an eye on the macro. Keep an eye on earnings reports. Keep an eye on sell the news events, buy the news events, and news from MicroStrategy. Put it all together, and then you make your decisions. So that's how it works. Now, the model that we're trying to build, it has never been done before. The model code is getting closer. I am not sure yet if it'll be scientifically proven. I am 60% sure we can crack the code, 40% sure we cannot, because this is very difficult. But I want it to be very directionally correct. Everything we build has to be 80% right 80% of the time. And that's all that matters. So that is coming soon. And I'm hoping that will be the big launch of 2025. So stay tuned for that. But you can do it yourself using the combination of IADSS, ATR model, boom, and ARB Cloud to know exactly what the premium is, or check the ARB model that I share on Patreon. Hope you like the answer. Matthew M. Hi, James. In your opinion, if everything is going to be tokenized and Solana is probably the blockchain it's going to be on, do you think Jupiter has the capabilities to run a stock exchange? And do you think the Jupe token is something we should have a foot in? And when do you plan to unstake? Thank you for your guidance. So first of all, I do own Jupiter. It's my largest currently now. I think Solana is my largest and Jupiter's second largest, or vice versa. They're both very close in terms of position size. But they are the ones that I'm very bullish on. And I stake my Jupiter to get the rewards, which are unbelievable. Unbelievable. Really, really impressive. And even get things like other stuff too thrown in there, which is crazy. But let's talk about this for a second. I do not believe Jupiter will be the underpinning of a stock exchange for the following reasons. One is security and compliance. While Jupiter has been pretty amazing in handling DeFi applications, running a stock exchange would require a lot more stringent measures, security, compliance, financial regulations, etc., which are incredibly difficult to obey. And this is areas where traditional exchanges have significant infrastructure around all of this compliance. Also, the Jupe token is a governance token. It gives holders the rights to vote in Jupiter's future direction. A stock exchange wouldn't want the Jupiter holders to vote on the direction of that particular platform. So would Jupiter be used? No. Highly, highly, highly unlikely. However, next piece, Solana. Could that work? Let's break it down. Some of the things that I've been watching for years now. And the original mission for Solana was to basically run at Nasdaq speeds. Currently, Nasdaq runs between 10,000 transactions per second and 70,000 during peak times. And this is, faster than the New York Stock Exchange, faster than other places. And that's where all the volume happens. But this implies that Nasdaq, could be replaced with a blockchain that can run at those speeds. But there's another angle to this as well that I see is tokenization would increase fractional shares and smaller buy sizes, driving up these numbers. A lot more transactions. It could be 700,000 transactions, 10x what Nasdaq currently do. And the good news is Solana Firedance can handle this and a lot more. Now, we know the most secure, best, cheapest, fastest chain out there is Solana. What would they do? I don't know. Maybe a version of it running Firedancer to do all the transactions. But I tell you one thing that is clear, and Larry Fink has signaled this as well quite a couple of years ago. He says tokens and tokenization are the next generation for markets. So he said that very clearly. That was, what year was that? 2023. So 2 years ago. And BlackRock Citadel Securities have launched what they call TXSE, Texas Stock Exchange Group, to launch a Texas Stock Exchange. And the underpinning of that, no ifs, ands, or buts, to be better, cheaper, faster then the New York Stock Exchange and the Nasdaq, etc. It has to run on a blockchain. What that blockchain is, we do not know yet, but we'll see. We'll find out pretty soon. There's also other stuff happening like X payments from Elon Musk. That's also probably going to run on a blockchain too. Everything will be tokenized. Everything will be running on a blockchain. That's just how it works. You're here to hear, folks. Next question is from Solana 17. This is interesting. I'm 30 years old and I've been following your Patreon and YouTube content for the past 3 years, as well as utilizing IADSS. It's been incredibly insightful, so thank you for sharing your knowledge. My pleasure. If you were in my position, 30 years old and actively using IADSS, how would you allocate your trading strategy? Here's what I'm currently considering. 30% leaps on Tesla and Microstrategy IBIT, sell calls at tops. Yes, I like that. 30% pair trading, Tesla and Microstrategy, NVIDIA, NVDS, which is the short version of NVIDIA for PTOS, pair trading on steroids, 4-hour and 1-hour charts. Yeah, you can even go fast, like 15-minute on the PTOS, so check that out too. 20% day trading, sol BTC on 15-minute IADSS signals. Optimized trend is the main guide. Yes, some people just trade an optimized trend alone, and it works. 10% stake Solana, 10% spot Bitcoin. I'd love to hear your thoughts. Well, you are extremely similar to me on many of these things. Obviously, if you've watched me for 3 years. But I want to talk about one thing first, before we get into your strategies and what I would do even at 30 years of age. First of all, Stanley Druckenmiller. He's one of the people that I look to and have analyzed for decades now. And he has been very, very successful in the markets. Okay. But preservation of capital, do not forget this. Do not forget this. However, the way to build superior long-term returns is through preservation of capital and home runs. Those two combined, especially the first part. It takes a lifetime to make it and a second to lose it. Remember that. And when you have tremendous conviction on a trade, you have to go for the jugular. So that's kind of the home runs, which is a baseball term, which means knocking it out of the park. And you get a couple of those in a lifetime. You know, in my past, it was like the Metas, the Apples, the Netflixes, the Googles of the world. They can really be life-changing. And this is what I did with MicroStrategy a few years ago, because I felt strongly about this opportunity, and it's been beyond a home run. But I do want to stress as well, I always say this, 80% should be your hodl bag, things you hold long-term, and 20% a trading bag. You're way too heavy on the trading stuff. So what I would do is up the spot. So for example, if imagine I have a position in Tesla, half will be leaps, half will be equity. Okay, no more than half. That's why. And I also go heavy on leaps in bear market bottoms and very sparingly at cycles like this when it's already very high. So that needs to go up. You're 30% on pair trading, very risky, very high. Unless you're starting with very little capital and you got nothing to lose, that's the only time you do 30%. Otherwise, that needs to fall by a lot. And if you do pair trading on steroids really successfully, you can start with like 100 sol and you can turn it into 1,000 in a short window of time. Now, 20% of day trading. Day trading is extremely difficult. You must be offshore, no taxes. Be careful with that. Optimized trend. Yes, it's good, but day trading, I think the more time you stretch out, the more you go to the swing trading side, every 2 to say 8 weeks, 2 to 12 weeks, that's where you can have far better results. But day trading, you don't know what's going to kick you in the teeth from one day to the next. So be very careful with that. I would definitely reduce that down an awful lot. And then your staked Bitcoin and your staked Solana is fine at 10%, but move the two middle ones down big time. And I like the way you're thinking. And again, paper trade first till you find you're proficient. You're doing way too many strategies, first of all. Unless you can do this full time, you're doing way too much. So scale back. Find one thing that works for you and be very patient. Very patient. Think of one of the examples I like to use. Imagine you've got 3 rocks in your pocket. Okay, 3 rocks. And you can only make 3 trades per month. You make sure they matter. It's like you're a sniper and you got 3 bullets. You got to take out 3 targets. You got to make sure they hit, not miss. Okay, I hope that didn't sound too extreme, but as a pacifist, I shouldn't be saying those types of examples. Anyway, keep up the good work. Let us know how it goes. Next question. This one is part of the reason we talk about shakedowns and stuff. So first of all, let's make it the best year ever. We are Satoshi. Yeah, we'll try. Honest question here. As you say, investing is a blood sport and you're up against pros and the bots and the algorithms. Yes. I guess that's why my investing strategy has just been to hold. That said, I've been doing that for a few bear markets now and never taken any profits. And I really would like to make my Bitcoin work for me, but I don't like the idea of selling any Bitcoin. I'm tired, boss. I work a physical job and need to start planning for my future. Do you think 2025 will be the year it will be safe and practical to loan some of our Bitcoin to the institutional grade lending services? And what do you think that would look like? I don't want to play games with leverage or anything like that. Just want some ROI so I can slow down a bit. So in your opinion, is 2025 the year that this becomes mainstream? Not yet. So first of all, there's a couple of things happening. There's a lot of stuff now that Bitcoin is an institutional asset. There's lots of plays coming in, lots of options, but it's still early. Remember, it takes a lifetime to make it. So I do believe it's still a bit risky. I'm waiting for the big players to come in that have huge brand reputations, like the Fidelities of the world. But still, if you do it, never do it for more than 10%. Make sure you retain your keys and do not expose yourself to any more than 25% loan to value. These are the rules, but there's other stuff coming in too. There's another question that popped in today related to this. And as soon as we can lend our Bitcoin and borrow to do things like buy real estate or multi-unit investments or whatever else, maybe even buy more Bitcoin, you'll be the first to know, and I feel confident in that. But first of all, this also came in just today. Shout out to Sanjay as well, who brought it to my attention. We have this new thing called Bitcoin-based life assurance in Bermuda. A lot of people are intrigued by this. Ooh, so can I, instead of borrowing against my Bitcoin, can I just take out some life insurance using my Bitcoin? So let's break this down. It is based on in Bermuda, the Bermuda Monetary Authority. They are taking applications. There is a list. And we're not sure when it'll be available, but sometime in 2025. And how much does it cost? Well, it's like life insurance. It depends on your age, sex, tobacco usage, etc. And looking at it, premium of 1 Bitcoin or greater will be paid in equal installments over 10 years. And then you get a certain payout. So I broke it down, and I could be wrong because the information available is a little bit sketchy. But for those who are thinking about doing this new thing, and this relates to our second question too, be very careful of things like insurance, life insurance, whole life insurance, assurance, because they're not always assured. But this is how I understand this thing, is you lend out, say, 1 Bitcoin per year for 10 years. And if you just hodl it, you get 10 Bitcoin after 10 years. And on the life insurance side, if you die, heaven forbid, you get 15 Bitcoin. So it's like a 50% payback. If you live, you lose the gains from holding on to Bitcoin. They just give it back to you. It's like your typical insurance plan. Second point is Bitcoin price doubles. Your Bitcoin, if you hold it, becomes 20 Bitcoin. If you die, you get 15 back, which is worth 30 in old terms because it's doubled. Not bad. And if you live, you're stuck with the original 10 Bitcoin, which means you could have had 20 Bitcoin by just holding. So you lose. So you really only win if you die. And what are the odds of you dying, etc.? Anyway, Bitcoin price decreases, it halves. Your Bitcoin becomes worth 5 Bitcoin. If you die, you receive 15 Bitcoin, worth 7.5 Bitcoin in old terms. So you still lose 2.5 Bitcoin. And if you live, you lose the equivalent to 10 Bitcoin at the new lower price. So all in all, it's not good. So net, for people that are out there with Bitcoin, I think it's too early to think about lending it out. So the conclusion for you is to hold, maybe take some off the top, do it in layers like we do here. If we do go to, say, 120, then to 150 or even higher, take a little piece off the top and wait, because it will mean revert. Remember, the higher we go, the higher we fall. Watch that very carefully. It's like throwing a ball in the air. The higher it goes, the faster it'll fall down. Okay? So, and also remember, very important, and I'll say this twice in today's video, a bird in the hand is worth two in the bush. Always. So try and have control over your assets and don't necessarily trust Tradfi yet, or maybe ever. We'll see. This next question kind of dovetails into the two previous questions. One is from Rocket Trader. This one, in 2012, a broker in Switzerland said I should invest in a savings policy, also known as an insurance policy. under the name RL360, formerly Royal London. The broker omitted to tell me that policy would charge me 0.625% in fees per month. Okay, that's like perp fees. It's crazy high. Needless to say, my policy struggled to make gains, yes, let alone beat inflation. It'll never do that. And 2 years ago, I switched these funds to tech stocks, and now I'm 13% in profit. I have a total of 23,000 invested between 2012 and 2017. If I withdraw my funds, I will face a penalty of 16,000 Swiss francs, and I only get back 7,000. I can only get the funds when I retire in 23 years' time. Would it be better for me to take the hit and invest in Tesla or MicroStrategy? Perhaps over the long run, they will outperform my current portfolio, which is killed off by fees. Yes, this is the classic shakedown. And I guarantee you, whoever this broker in Switzerland was, he called you every day, twice a day, for weeks and weeks and weeks and weeks. Remember, if it's sold hard, it's a scam. All right? I figured this out decades ago. Same thing. Anybody pushing anything on you, shilling anything hard, it's a scam. So be careful. So first of all, let's talk about this shakedown. All life insurance is. Be very, very careful. You can only benefit if you know you're going to die real fast. And that's a terrible thing to say, but it's a fact of life. Anyway, the excessive fees are ridiculous. That, whatever that is per month, is about 7.5% per year just for having your money there. It's like paying for protection every month when you're not even being protected. And the complete lack of transparency. The broker did not tell you about these high fees, which is like a mob boss not telling you how much you're really going to pay for protection. And the surrender penalties, it's like holding a gun to your head. They take a chunk of it, a huge chunk. They've got your money in a lockbox, and they pay you to get out of it. And they only give you crumbs back. And your investment options probably suck. So you're forced to buy only the bad protection plans they offer, which they make a ton of money off as well. And then your long lock-in period is ridiculous. 23 years. The world would be radically different in 2 years, 3 years, never mind 23 years. You're with us until retirement, buddy. And this is the shakedown. That's everywhere. And this RL360 scam is well known. That's been documented for years and years and years. This is from 2015. The exposed rip-off investment advisors who cost British expats billions. That's from The Telegraph, by the way. You can check it up. There's hundreds of articles about this RL360 scam. So people think scams only exist in crypto? No. Scams exist everywhere. Remember, if somebody is trying to sell you something hard, do not buy it. All right? Do not fall for it. Bird in the hand, we're two in the bush. And this is your savings policy team. Hello, Sopranos. So that's basically who sold you this crap. All right? So be careful, everybody. This is for everybody. Very important. Now, and I'll say again, second time showing this, bird in hand or two in the bush, even if you're just getting $7,000 or 7,000 Swiss francs out of the 23,000, take it. Buy some Tesla shares, wait 10 years, wait 23 years. You'll do far better than staying in this policy, which will not even beat inflation, which is also going to be rampant. Sorry for the grief tidings. Again, take the cash out. Control your destiny. That's one of the reasons why I never did retirement accounts or anything like that, because I didn't even think I'd be alive at 65. And I knew if I had the money myself, I'd be able to make a lot more money on it than shitty investment options and mutual funds and stuff. So sorry for yet another cold blanket today. But sometimes we got to share this news. Next question. This is from Trading Cruisin'. First time you've posted. I do own Bitcoin, MicroStrategy, and Tesla. First question on the channel. So I'm interested in AMD and want to know your thoughts about the fundamentals. Semi, data center, AI, and whether the price point trend is attractive to invest to trade in. So we'll look at some fundamentals, we'll look at some charts, look at the space, and we'll compare to the leader in the space. Okay, first of all, winner takes most. You hear me say this over and over again, like many of the other things. All these rules are there for a reason. Live by the rules, everybody. Do not deviate from the rules. NVIDIA has nearly 90% of the AI chip market cornered. AMD, not so much. Yes, they're doing some inference chips in some cars, like Tesla. I think the Chinese vehicles now have AMD chips in them. So they're chipping away, excuse the pun, a little bit. But will they be as dominant as NVIDIA? No. Can they move as fast as NVIDIA? No. Do they have the integrated silicon with software? No, not yet. Not at any level of the maturity that NVIDIA do. Let's look at some financials. Let's look at the NVIDIA financials. Insane growth, blue revenue, just tick, tick, tick. Unbelievable every quarter. Net income also up every quarter. EBITDA up every quarter. Cash up every quarter. Debt falling. This is a perfect, beautiful chart of financials. You will never see anything this perfect until you see Tesla in a couple of years. Mark my words, you'll see. In fact, the Tesla earnings will probably go more like an S curve. Watch this space. Next, AMD Financials. Not so much. If you look at the revenue, it's pretty much flat since 2022. Not good. Cash is going down. Debt, pretty steady. Earnings, nowhere. So they're obviously trying to invest in their business to catch up with NVIDIA. Can they? Probably not, because the pace at which NVIDIA innovates is faster than anybody else. That's why they got the market cornered, and the demand for AI chips is to the moon for the next couple of years, as long as companies can afford it. And there's one company that's buying all of them. They've cornered the market too, and that's Elon Musk's companies, XAI, Tesla, etc. Let's look at some charts. Your question was, is this a good time to maybe scalp or quick trade? Let's look at NVIDIA on the ATR. Again, it's approaching level 6. It's about level 5.7. Keeps breaking new highs. Yeah, it's choppy, but the overall trend is still very up and to the right. Again, price discovery coming soon. If we look at AMD, it's down at level 3 on the ATR. That's not good. It did have that spike early 2024 and then just did horrible for the next 12 months. So be careful. Now, you asked, would it be worth a quick scalp? Looking at the chart here, it says yes. It says buy signal, buy at level 4, level 3, sell at level 4, level 5. Watch how it goes. Chase it up with a tight stop loss. That's what I would do with AMD. So hope you enjoy that. Next, but remember, winner takes most. Stick with the winners. You can dabble with number 2 players if you want. Next question from SS Reese. Thank you for all the work. New in the Patreon community. Welcome to the team. What do you think of the data provided by chainspect.app regarding the top 2 chains, Sol and ICP? What are your thoughts on the future of these 2 chains? Well, if you know me, which you probably do, you know I believe there's one winner. Winner takes most. That's already Solana. They do 67% of all activity, all transactions on blockchains today. Let's look at this site, chainspect. You can see here, on top of their list is ICP at 1,337 transactions per second. Solana, 1,265 transactions per second. By the way, that's non-vote transactions, pure transactions. And that seems really impressive. That means that ICP is doing more transactions than Solana. But Solana does it all. Something fishy is going on. So again, I don't study ICP. I studied it back in 2021. I know the tokenomics score, the crypto compendium score, the SCP profiler score. It's something weird going on. Let's dig into it. First of all, I Googled ICP videos. This was interesting. They all seem to be the same guy. And owning 333 ICP means you're a future millionaire. Okay. So if I bought 333 ICP, it'll only cost me less than $4,000. And it'll give me a 256x return. That sounds pretty good. Wow, interesting. Oh, this is the guy who also, by the way, I Googled the guy behind all these videos. We'll just leave that there. Next, let's look at some data. Let's dig into the data. Sol versus ICP part 1. Transactions per second. ICP, 11,500. Theoretical max in Solana is 710,000, going to about 1.2 million with FireDancer in the next 1 or 2 quarters. Daily transactions. This is weird. Daily transactions, 69,000. And users, 11,000 versus 65 million for Solana and 6.2 million daily active users for Solana. And fees, well, 5.5 million in a day for Solana and $83 for ICP. So something already doesn't jive with this right here. Something is off, maybe the way they measure. So I double checked the data, went to MESSARI to get the daily active users, etc. And yeah, it checks out. 11,400 daily active users on ICP. Let's look at Sol versus ICP part 2. FDMC over daily transactions, FDMC over daily active users. Over 563,000 per daily active user. That's as expensive as Cardano. And you know I keep talking about how expensive that chain is. It's ridiculous. But everything else is completely smoked by Solana. So is it a top chain? I mean, you got Solana being 92,000 times better, 92,000% better on stablecoins, 200,000 better on DEX volume, 17,000% better on TVL, etc. You can see the numbers for yourself. We just look at the numbers here, and that seems weird. But let's try figure this out because I don't. All right, it's something that's very fishy here, and we've seen this with other chains. We've exposed them all by just analyzing the data. So ICP does $83 in daily transactions while doing 112,320,000 transactions per day, supporting 11,000 users. All right, that means each user is doing about 10,000 transactions a day. And something does not add up. So let me check with Mert. Mert, LOL, ICP was down for hours, not even last month, and they don't report it, and it doesn't even make the news because there are only 4.5 users on the whole chain. And he's talking to some recommend not lying next time, charlatan boy. So that's Mert. He knows what's going on. Something is very fishy. The way it's pumped, the data doesn't add up. So you can take this and ignore it because 11,000 users cannot do the insane clown posse 112 million transactions a day. Unless they're just turning on a machine and letting it run. And they got a little counter that just counts all these transactions, but nobody's actually using the chain. That's also part of what can be construed as a shakedown. So yeah, be very careful. But there's more. Let's look at some charts. Let's see how ICP versus Sol are doing. ICP in the ATR is Yikes. This is beyond zombie level. I mean, it's down from crazy high numbers to basically nothing. It's just, and people get excited when it pumps, but you got to look at where it came from. You know, this thing was like $400 and now it's $11, $12. Yeah, it's been pretty rough. The ATR model was built to identify zombies, and here we are. It's a zombie. And Sol versus ICP, Solana's 14,000% better in terms of performance, which actually jives with some of these numbers here and here. So remember, the truth is always in the data, ladies and gentlemen. That's all we look at here, a lot of it. So, yeah, be careful. Be careful of the shakedowns, everybody. We covered a couple of them today, and we're helping animals this week. As always, shout out to everybody who helps as well. We donate to the Sea Shepherd to help support their mission to halt attempts to double krill fishing quotas and drawing attention to the destructive practices threatening the Antarctic food web. Remember, if you fish all the krill, you take away the whale food and the whales die. So we're actually indirectly saving, hopefully, the krill and the whales too. So thank you, everybody. And a quick update. DCA, due to some travel plans for one of the team members, will be on Tuesday instead of Monday because they're in the air and we don't want to miss them on the team because the four of us work really well together. So that'll be Tuesday. Tomorrow will be Okta instead. Okay? And I hope I'm going to do some live questions now. Hope you like the content. And let's jump into it. That was called The Shakedown. And once again, thank you to all the mods in the chat too. Let me check on Bitcoin price actually. 98,300. It's Sunday pump day. We'll see if we get another pump. It has been volatile the last couple of days, shooting between 97 and 99,000. We'll see where we go. And thank you, Sean Donnelly, Team Details okay. If I didn't say that already, let's get into some live questions. First of all, Nick M, thank you for what you did. Thank you for being here as well. And Anglo Blackson, thank you, buddy. Do we poll net worth? I do a check yearly, and yearly poll would be cool to see how the community grows. No, we don't. But we don't ever want to be on the receiving end of that type of information because we turn ourselves into a honeypot. And we don't want to be that at all. But there are some people have done very well, let's say, over the last 2 years. Charles Kincannon, when will the rotation tool be out? We'll be taking profits, and I want to keep more profits coming. So big focus will be profit taking. And, Well, it's also what we're trying to figure out as well. Sometimes it's okay to rotate out of an asset and sit in cash for a little while and then wait for the prime opportunity to rotate into something else, or do it directly. It depends. We are hoping this is, again, something that's never been done, to be able to take a portfolio and identify optimal times to rotate between assets. It is really, really, really tricky. So I'm not even sure we'll crack it. I think there's a 6% chance we will crack the code. I've been handling the team on this now for most of 2024. Fingers crossed. Can't say when. Right now, if we're lucky, it'll be March at the earliest, if it'll ever come out at all. So that's where we are. Tchaikovsky, thank you, behind the scenes crew. Yes, they are awesome. I am Colt. Happy New Year's Eve, James and I family. How does a whole coiner take profit while still valuing the importance of maintaining the whole coin status? Well, now you could short or hedge or put a collar in around IBIT options, because IBIT's optionable. You can use that as a proxy to protect your bags. So you can calculate the number of shares you need to protect a whole coin. You basically take the Bitcoin price divided by IBIT, and there you know how many shares you need to protect, and then you divide it by 100. That's the number of call options to protect yourself. And there's different ways. When we get closer, I'll be sharing all the different methods we can use that are most cost effective as well. But typically, I do believe the drawdowns will be less this bear market, maybe no more than 40%, maybe 50%. I do believe the new floor for Bitcoin is about $70,000. I don't think we're going to breach that unless all hell breaks loose and we get terrible economy and terrible black swans. But that's what I say. So you want to build a collar in place to protect just down to that level. I'm Colt. You will be up to speed. Sigdiv, how are you, buddy? That is SGDIV. Thanks for all you do. I have rolled profits into Bitcoin, Tesla, and MicroStrategy, and Solana. At the end of this run, do you see other investments to roll into, or will these still be the ones to catch in dips? So, as you know, my big plan was to, big picture, 35,000 foot view plan was to heavy focus on crypto and stack as much Tesla as I possibly can, because it's the leading AI play. And I still continue to stack Tesla, and I've been doing it now for over 2 years. Every opportunity. And I've drastically slowed down my crypto purchasing. But the next phase will be profit taking on crypto and rotating that, if the price is right, into Tesla. You'll always get a dip. You'll always get an oversold situation like we had at 375 this week. That's when you strike, because you know it's going to 2,000. And remember as well, think of, I now refer to Tesla as my new money market account. Every cycle I have a money market account. It used to be like in the late 20 teens. That was Bitcoin. So any savings you put into Bitcoin, and then it became other assets. So every asset has its day. And the one to stack now is for risk return, risk reward. Tesla is the one. That's where we will be taking profits. We'll not be selling any Tesla. And, if we do get the strategic Bitcoin reserve as well, I do want to say this. And if there are new players like MicroStrategy stacking like crazy, that takes profit taking off the table for Bitcoin. All right. Remember, that's why I watch on-chain religiously. I track ETF flows every day religiously. I track what Sailor does every day religiously, and the other 70 Bitcoin treasury companies. If they continue to stack and there's a strategic Bitcoin reserve, the dominoes fall. That's it. That's Omega candle time, ladies and gentlemen. Watch this space. We'll be ready for it. Okay. Not saying it's going to happen. I hope it does. But if it does, woohoo, then we all party. It'll be fun. The Super Trooper 108. James, have you done risk reward of Bitcoin and Tesla recently? With your projected upside of Bitcoin only 125K and a 50% drop risk, with Tesla having a 2,000 share upside with no 50% downside drop, shouldn't we sell all Bitcoin and buy Tesla? Well, that's the $1 million question. On the 4th of July, 2024, I remember the heat I got for this. At the time, I think I remember Tesla was like a 170. Bitcoin was at like 78,000 or 90,000. I said, the risk reward of Tesla will 3x outperform Bitcoin over the next up to 2030, 2032. And people thought I was mad. Well, not mad now. I will do an update of that to square them off, because I have so many price prediction models across Tesla and Bitcoin, because they're my two biggest holdings, with proxies, of course. That's what I focus on. And I will do that again, because certain things are going to move really, really fast in 2026. That is Tesla. 2026 will also be the bear market, if there is one, for Bitcoin. That's why rotation is so important. And that's why I always also plan years ahead. Years ahead. You don't want to be planning at the last minute, because then you're going to make a mistake. But you need that big picture game plan in your head with lines on a calendar, and then prepare. But right now, if you know, it's all about game theory. Is game theory going to kick in for Bitcoin? If it does, a supply crunch will hit. If it does, all your models are broken, as Michael Saylor says. Everything is broken. We go to the moon. But I don't know if that's going to happen. If it does, that's part of it. And when you do an EV calculation like I do, like I say, there's a 20% chance of a supply crunch. And if there is, it's a 250K target. It changes the game. So you do 20% of 250, you get the math, and you add it up to your 120 and all the other dots along the chart. You get the EV. I'll do that real soon, everybody. But it's a great question. Super Trooper 108. And thank you, Andy Martello, MR, DBF 430, Glenn Joe, Forrest M, Investing KO, Dog 1, Signal 103, Moto 89, Teslaroo, cool name, like a kangaroo from Tesla. Hudson the Dog, Dude Travels, Anjo, and Piper. Happy Sunday, everybody. Take care of yourselves. I'll see you all tomorrow for Octa Tuesday DCA. Remember that. Thanks all. And thank you to the mods as well. Have a good night.